Good evening, everyone. I'm Jerry D'Ambrosio, and welcome to this week's special presentation. 2019 is coming to an end, and it turned out to be a great year for the stock market. All the major indices are at all-time highs, and the VectorVest composite rose 22% so far this year. However, there's no time to be complacent. We have to stay laser-focused as we move into 2020. So tonight, I'm going to show you how to find the hottest sectors in the market heading into the new year. I'm going to move us from the home page into the Unisearch tool, and I'm going to open up the Delta Searches Sectors folder, and I'm going to choose 13-week RT Delta. Now I chose 13 weeks because it's essentially the last quarter. So I wanted to look at the fourth quarter of 2019, see which sectors have been the hottest heading into 2020. And I chose RT and not price because I wanted to keep all the sectors on the same playing field. You know, there's a big difference between a $10 move in a $50 sector as opposed to a $10 move in a $100 sector. So I wanted to equal the playing field, and we do that when we use relative timing. Notice at the top here, we're not going to return stocks, we're going to return sectors. So if I run that search just as of the close of yesterday, here are the top 5 sectors with the greatest percentage change in relative timing over the last quarter. Paper up at the top, 48% change in relative timing over the last 13 weeks. You can see it has a current RT score of 1.27. Second is office, current RT of 1.29. That's gone up 40% over the last quarter. Drug comes in third, 28%, with a current RT score of 1.06, and then steel and apparel rounding out the top 5. So before we dig into each of these sectors to find stocks to invest in moving forward, I want to take a look at the charts. I want to see if there's anything that we can take away, technically speaking, that might help us moving forward. So I'm going to click on Graph All, and here we're looking at paper. The paper sector price is at the top with the relative timing indicator in red. You can see the RT score is at 1.29. Now it's flattened out over the last month or so. It's still in a strong uptrend at 1.29, but what I see here is an inverted head and shoulders pattern. Now an inverted head and shoulders pattern is comprised of 3 components. After a downtrend, price falls to a trough, subsequently rises to form a peak, which is generally lower than the previous one. Price falls again to form a second trough, substantially lower than the first. Price rises again, generally to the same level that it did prior to the second trough, and then falls for a third time, but only to the level of the first trough, before rising once more, reversing the trend. Now, a bullish breakout to the upside occurs when price crosses above the neckline. You could see a pretty significant resistance level at right around $37.52. That's the neckline of the inverse head and shoulders. And as you can see, at the end of October, price broke out to the upside, reversing this downtrend. Did come back to retest it just for a few weeks there, but has subsequently retraced from that support level. Remember, when price breaks resistance to the upside, that resistance level becomes support. You could see support has held, and the price of the paper sector has moved up nicely since. So technically speaking, we're looking at a nice uptrend here with the RT of 1.29 and price reversing trend, breaking out through the neckline and moving higher off of the support retest. Here's the office sector. I don't really see an inverse head and shoulders, but what I do see is a pattern called a bull flag. First off, the RT indicator is at 1.29, and the bull flag is as of the most recent data. So if I just draw a freehand line, it's called a bull flag because the pattern resembles a flag on a pole. So let me explain the psychology here. The pole is a result of a strong move to the upside, followed by a period of consolidation. Sometimes that consolidation can angle down, can angle lower. I'll show you what it sometimes will look like. Sometimes you'll see price kind of remaining in this channel, which does angle down. Other times, the consolidation can just occur in a horizontal rectangle. Despite the strong rally, price refuses to drop considerably. Buyers are snapping up shares at any chance they can get. So what we look for here is a breakout to the upside. RT is moving up nicely, so that's a good sign. You could see price. Let me just zoom in here a little bit. The price of the office sector is just about to break out above that resistance level here, right at about $32. So in order to participate in the office sector moving forward, we're going to want to see a nice breakout above that consolidation level there. Here's the drug sector. So a nice strong move recently. You can see the RT indicator just crossed above 1. And if I just draw a freehand line connecting these lower highs, what have we seen recently? We've seen a nice breakout to the upside, a nice change in trend. If anyone's ever traded drug stocks before, you know how volatile and erratic they can be. Drug stock prices move mainly due to news. It could be anything from a court case to positive or negative drug trial results. So what I would say here is just be a little cautious with this sector. It's moving up nicely. Again, RT of 1.05, clearly no longer in a downtrend. So it might be a nice sector to participate in 2020, but just know what you're getting yourself into. Here's the steel sector, another inverted head and shoulders pattern. You can see the neckline right in this area here. 1, 2, 3, 4, 5 touches in that 1688 resistance zone. Recently though, nice breakout to the upside. Remember, when price breaks out through resistance, it becomes support. We've seen just recently a retest of that support zone. So moving forward, it's got a nice RT 1.28 to participate in the steel sector. Technically speaking, we just want to see price retrace from that support level. And currently, it's residing right over it. Okay? And then finally, the apparel sector. Not quite an inverse head and shoulders because this rally off of this August bottom didn't quite reach the same level that it did back here. Nevertheless, we're looking at a nice strong uptrend here over the last quarter or so. Relative timing at 1.13. Nice move higher, higher highs and higher lows. This trend line here has served us nicely over the last 4 months or so. So what I would expect here in the near term is a retest, right? What have we seen? Higher highs, but subsequent pullbacks. Where have those pullbacks stopped? Right at that trend line. We're seeing a nice strong move to the upside in the apparel sector, but the rally might be a little long in the tooth, a little overextended. Just for the near term, what I would expect is a retest of that trend line. As long as the price of the apparel sector stays above that trend line, we are looking good moving forward. So that was just some basic technical chart analysis. Gives us some nice insight moving forward. Now let's dig into each sector to find individual stocks that we could invest in moving forward. So I'm going to right click on the paper sector. I'm going to go to view stocks in business sector. And we're looking at the 20 stocks in the paper sector sorted by VST. So we're going to just go through some basic analysis. Top stock is KAI. It's got a price of 105. It's got a value of 134, so that's good. It's undervalued. It's got really good upside potential, RV of 1.33. It's a safe investment, RS at 1.23. It's got an RT of 1.45, so it's in an uptrend. Good VST score of 1.35. They're earning $6.01 a share and growing that at 13% a year. So really good start here in this paper sector. Now, the second stock, VRS, it's got a price of 18, value of 17. Not great, but the fundamentals aren't great either. Relative value of 0.77. Relative safety of 0.77. So fundamentally, not a very sound company. It's in a nice strong uptrend though at 1.67 RT, earning $2.34 a share, but we're forecasting them at a negative 7% over the next year. Does have a buy rating, a little bit more of a speculative trade. I think we could find a better one. Right below it, SWM. Price of 43, value at 54. That's good. It's got good upside potential, 1.24 RV. Relative safety, a little bit unfavorable, 0.87. It's in a nice strong uptrend though with an RT of 0.37. They're earning $3.39 a share. We forecast them to grow that at 10% over the next year. Also has a buy rating. So we looked at the top 5 sectors, right? The top 5 hottest sectors over the last quarter. So maybe you take 2 stocks from each sector. That'll round you out to a nice 10 stock portfolio. So look no further than the top of the list. I'm going to right click. We're going to go to add to watch list. I'm going to open up my special presentation 2020 folder. This is just a folder that I created, and I'm going to select new watch list. We're just going to call this hot stocks for 2020. I'll click on add and we'll click on OK. That'll put those 2 top stocks in that watch list. And then we'll just go down the list. Office is second, so I'll right click, go to view stocks in business sector. Only 10, but we'll take a look at the first one, AVY. Price to value comparison, that's good, right? Price is under its value, so it's undervalued. Good RV, good upside potential. Nice safe investment with an RS of 1.32. It's in an uptrend, RT of 1.38. It's got a good VST score. They're earning almost $7 a share, growing that at 10% a year. Now Office Depot, we can probably find a better stock in this sector. Price of $265, only valued at $231. Poor fundamentals, RV of 0.89, RS of 0.79. However, it's in a really strong uptrend, and that's what's giving it its buy rating. But look at this, they're only making 37 cents a share, and we forecast that to go down 2% over the next year. What about Xerox? Maybe a better company in that space. Undervalued, good upside potential, a little bit of a riskier investment, RS of 0.82. It's in a nice strong uptrend, earning $4 a share, growing that at 16% over the next year. So we highlight those 2. Both have buy ratings, so I'm going to right click, go to add to watch list, and we'll add those 2 stocks to our hot stocks watch list moving forward. And we'll do the same thing for the drug sector, the steel sector, the apparel sector. You take a few stocks from each sector. That'll give you a nice 10 stock portfolio. The best stocks in the hottest sectors over the last quarter heading into 2020. That sounds like a recipe for a great start to the year. Well, folks, this concludes tonight's special presentation. Merry Christmas to everyone, happy holidays, and we'll see everybody again soon. Take care, folks.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.